Most people don't really understand that Bitcoin is the world's first digital monetary network, which means that ultimately it's 100 million people using it, going to 1 billion in 5 years, and eventually everybody with a mobile phone will have some Bitcoin on their mobile phone. I think that that's a big dynamic. I think that is the big tech companies like Facebook and Apple and Amazon and Google and as they embrace it, I think that's going to drive adoption, and I think they'll have to embrace it. I think the big banks will actually start to embrace Bitcoin as collateral. I think that most people haven't really thought, most people that buy Bitcoin, they think I'm buying it so I can sell it when it goes up. I think what they don't realize is that ultimately no one's ever going to sell Bitcoin. As the market matures and as the banks mature, you'll buy it and hold it forever. You'll give it to your daughter or your son and your son's son and your son's son's daughter. Why would you ever sell it ever? I mean, most people sell it to buy a Lamborghini, right? I mean, that's the trope. I want to sell it to buy a house, or I'm going to hold it. We have two corporate strategies. One strategy is to continue to grow our enterprise software business, which is business intelligence software. We sell it to thousands of companies all around the world. And that strategy, for the most part, is a cash generating strategy. We don't really need a lot of capital to execute that. It's more skill and about polishing the software, and then we upload the software, and our marketing and sales are primarily via websites and efficient channels. So the second strategy of the company that we actually made clear in our latest 10K is a Bitcoin strategy, and that's to acquire and hold Bitcoin. And so our latest capital raise was pursuant to that second strategy. That is a capital intensive strategy because obviously we're buying Bitcoin. And what we've made clear to our shareholders in the marketplace is that we're going to sweep excess cash flows from the business into Bitcoin, since it's our primary treasury reserve asset. So as the business generates cash, and we generate cash from quarter to quarter and time to time, we just convert that into Bitcoin. And then from time to time, we may do either equity or debt financings to raise capital to buy Bitcoin. Now, we in essence, we did an equity offering of sorts back in September when we did a tender offer, and we offered to buy $250 million worth of our own stock in a Dutch tender. And the amount that wasn't tendered, we actually converted into Bitcoin. Then in December, we did a convertible debt offering for $650 million of convertible debt. Those terms were, I think, a premium of 37.5% above the stock price at the time, and a coupon of 75 basis points. So that, I think the stock was trading in the low 300 range. I think it traded at 290 or so the day we did that convert. And the strike price on the convertible bond was $398 a share. So that means that if the stock trades above $398 a share, the people that own that bond have the right to convert their bond into shares at $398, and so they have equity participation above it, and then below $398 they have a bond, and that was a 5-year bond. So we issued that bond, and we bought and we had $650 million in proceeds. So we bought $650 million worth of Bitcoin, around 21,000 and something. And then Bitcoin continued to appreciate. Now, if Bitcoin is trading less than what it is right now in 6 years, then that's the risk. We will have lost some money. But if Bitcoin is trading more than it is right now in 6 years, then we will have made money. It's not really dilutive to our existing shareholders until the price of the stock gets past $1,400 a share. And then it's about 5% or so. You could calculate 600,000 shares against the fully diluted. So maybe it's 5% of the upside past the strike price. So that's the way to think of that. And from a strategic point of view, if I look at the numbers today, Bitcoin's up 429% over the last 12 months, and it's up on a compounded annual growth rate of 196% on average for the last 10 years. So if you're a finance theorist, what you would say is, we just borrowed money at 0% interest to invest it at something that we expect to be 196% interest. And maybe you're not so bullish for the next decade. So if you want to be conservative, you could say perhaps we'll do 1/10 of that. We borrowed money at 0% interest to invest it at 20%. But pretty much any number more than 0%, right, is a good number, right? I mean, because the interest rate is so low. So that's what we did with that bond issuance. And it's an opportunity that a publicly traded company has, right? I mean, Bitcoin is a monetary network, and it is the best performing asset class in the past decade, maybe the best performing asset class in the history of the world. What do you need to grow a monetary network? You need money. Okay, where's the money? The money is sitting in the public stock markets, either as equity or equity derivatives or secured debt or unsecured debt. So what we're doing in essence is we are securitizing Bitcoin, right? I mean, there's one way to buy Bitcoin, which is to buy Bitcoin straight. Well, that's the challenge to some people. Certain investors don't have the relationship with the Bitcoin exchange, or they don't have the ability to custody the Bitcoin, and that is a dilemma for them. Or it's not in their charter, or their limited partners don't understand it. So it can be a challenge to buy the underlying asset class. There will be governments, that will be forward thinking, and others will be backward thinking. I think the politicians in the Western world will realize, and they do realize, that Bitcoin is the fundamental underpinnings of the 21st century finance system. A block of Bitcoin is like a block of light that has dematerialized monetary energy in it. We found a way to dematerialize money and move it at the speed of light and make it a million, if not a billion times more intelligent.